John Noonan, Senior FX Analyst at Thomson Reuters, joining us from Sydney today. And Marc Faber is with us too, Editor and Publisher of the Gloom, Boom and Doom Report. John, let's pick up on some of these Euro concerns that there might be restructuring of Greek debt and also concerns about the bailout now of Portugal, given the change in voting that's occurring in Finland. How much is this is priced into the Euro, and do you see real solid risks here?
Well, I don't think it is priced into the euro. I think the foreign exchange market investors have been focused purely on the fact that the ECB will be more aggressive than the Fed and the Bank of Japan. But it really is a G3 ugly sister contest that continues to go on and on. I think it's showing up now that European authorities, a year ago, while they were addressing some of the liquidity issues with the bailouts and the ECB moves, they never really confronted the possibility that restructuring would have to take place. And I think where that smoke is, there's a lot of fire. You may see the market, after a very strong rise since the end of March in the euro against both the dollar and the yen, may start to ease back a little bit on profit taking, nothing else. But the alternatives aren't that wonderful.
Yeah, John, but I guess if we hear any further hawkish comments from the ECB, then doesn't that put the interest rate story back on the agenda again and overtaking these European debt fears?
Yeah, well, a lot of it depends on market positioning, and the market is very positioned along the euro on that very aggressive ECB. I think the market's pricing in about 3 rate hikes between now and the end of the year, or 2 more, I should say. That's already priced in, and there might be some concern that maybe the ECB will hold off a little bit if it looks like the likes of Ireland and Portugal and the other peripheral European countries are not coping well with the rising interest rate scenario. So I think it's more about positioning. We're heading into the Easter period, and I think, after a long run higher, we could see a bit of profit taking, but not too much.
John, Bernie in Hong Kong. I'm with Dr. Marc Faber, the original Dr. Doom. And you're sounding pretty sort of doomsday these days about a lot of stuff that we've talked about. Could I get you to engage with John in Sydney, Mark?
Yes, hi, John. I basically agree with you, but obviously I think that you're right in saying that we're in a contest for the ugliest currency. But I disagree with the fact that people are heavily positioned in euros. I have a lot to do with very well-to-do people around the world, Latin Americans, US citizens, Europeans, Asians. I would say most of them had at least 70 to 80% of their money in US dollars. Now, occasionally the market participants, the speculators, may be heavily in the euro and negative about the US dollar. But by and large, there's a huge overhang of US dollars globally. And I tell you, if people could sell their dollars and move into something they believed in, they would do it. But I believe that the best currency is still gold and silver, and this is not the perception of most people. They think that gold and silver are speculative investments.
Okay, John, what do you think?
Yeah. Well, I would agree with a lot of those sentiments. As far as the positioning is concerned, that's why I don't see much of a correction in the euro. Also, you have to add to that the fact that Asian central banks have been intervening heavily. They've got US dollars they don't want, and they diversify all the time. So there's still this supply-demand effect that is helping the euro. So I think it looks as if the dollar is going to continue to trend lower. I agree with that. I was looking for a really relatively small correction. And also, too, it's very noticeable as well that we're seeing a lot of speculators moving into the emerging market currencies. That continues to be a very, very hot destination. The Aussie and the Kiwi going to levels that they haven't, all-time highs or post-float highs in those currencies as well. So, yes, I think you're right. I think the markets are looking for alternatives to the dollar and in some ways to the yen and the euro as well, and that's why the emerging market currencies are doing so well. But I heard what you said earlier about, the various bubbles that could be in sectors of the Chinese economy, and I agree with you. In all my years in markets, it's never different this time. Bubbles always burst. So there's a lot of risk out there, and that would send gold, I guess, up above 2,000 in a heartbeat.
Wow. John, Mark was sitting here while you were talking, doing a Calvin and Hobbes when Mrs. Wormswood called on him, and he had the answer. What set off the alarm bells?
Well, I think that conceivably the US dollar here could rebound. but I maintain my longer-term projection. The value of the US dollar will be precisely its intrinsic value, namely zero. Precisely zero.
2 years ago.
Yes, I told you 2 years ago, and I still maintain that.
John. Okay, if the G3 currencies are the ugly sisters, then is the Kiwi dollar something of a beauty queen? It did hit a 3-year high. It did back off from that after the inflation data came out. Not as hot as everyone was expecting it to be. Is the bias to the upside for Kiwi, John?
Yeah, well, the market was very short the Kiwi because after the earthquake, and now we're seeing some reinsurers having to buy Kiwi as those flows come back into rebuild from the Christchurch earthquake. That has given the Kiwi support and has caused some short covering. The market's also fairly aggressive in pricing in RBNZ rate hikes, but I have the feeling, we at Reuters believe that they may be a little bit disappointed that the RBNZ might not be as aggressive going forward. But a lot of investment banks are looking for the RBNZ to take back the accommodation that they gave very quickly and then start on a tightening cycle. Once that perception is watered down, I think the Kiwi could come off these highs.
Okay, listen, John, great to talk to you. Thanks for the time. John Noonan, Thomson Reuters, live down in Sydney.